Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Aditya Shah, founder, Hercules Advisor. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi Aditya, good evening to the Money Show. And let's take our first viewer's query, Rahul Sharma. And he's investing 5,000 rupees in SBI Contra Fund, Nippon Small Cap, Nippon Mid Cap, HDFC Flexi Cap, Axis Bank, Axis Small Cap, Bermuda Asset Mid Cap, HDFC Mid Cap Opportunity Fund, and time horizon for this investment is 15 years, and he wants to know if he can generate 3 crores in 15 years, and how much should he be increasing or stepping up his SIP amount every month, or is any shuffling in his fund mix needed? All right. So again, one more question where we see a lot of exposure to mid cap and small cap. I think that's a usual case with the investors these days, Aditya. Although it's not wrong to have a higher exposure to this category, but then you also have to make it sure that, you know, it is properly diversified and you have your risk profiling done. Talking about Rahul's portfolio, how much do you have to invest every month to have 3 crores in 15 years? Just a general calculation.
If you want to get 3 crores in 15 years, and I assume a nominal return of about 10%, the SIP of 70,000 has to be done over a period of the next 15 years. That's one part of it. The investor is not doing that kind of an SIP. So I suggest that he steps up the SIP at least by 10% every year and elongates his time horizon, the first point. Second point is, as you correctly said.
So Aditya, what's the CAGR you're expecting on 70K?
10%, ma'am. That's the base return that we expect. 10 to 12% is the return that we expect in our calculations per se, because we assume Nifty has given a return of about 10% since its inception, and that's the base return that we have to assume in all our calculations. The second point is investor, as you correctly pointed out, ma'am, that all investors are now leaning towards the small and the mid cap space, because the small and the mid cap space has given humongous amounts of return over the last 6 months. However, I would suggest to the investor must risk profile properly, and only after risk profiling properly, the investor should invest in the small and the mid cap space. From the investors' portfolio, I have chosen 3 funds. Those 3 funds are Nippon Small Cap Fund.
And let's talk about the funds, and let's also decide. Let's also look at the kind of funds he needs to first hold on to. So, in which funds you think the investment should continue?
Yeah. So I have chosen 3 funds on this portfolio: the Nippon Small Cap Fund, the Parak Flexi Cap Fund, and HDFC Mid Cap Opportunities Fund. These are the funds in which he's currently investing in, and he has to stop the existing SIPs and continue his SIP into all of these 3 funds. For the existing investments that he has got, he can slowly redeem, and after redeeming them slowly, he can invest in all of these 3 funds also through an SIP route. Consistent and disciplined investment over the next 10 to 15 years.
So you are recommending him to stay put in Nippon Small Cap, Parak Flexi Cap, Nippon IDFC Mid Cap Opportunity, and
HDFC Cap Opportunity.
HDFC Mid Cap Opportunity also. So these 3 funds basically.
Right, absolutely.
Okay. No large cap exposure needed to balance out.
And we have got a Flexi Cap Fund. A Flexi Cap Fund will make sure that the...
Is it a large cap? Is it a large cap biased Flexi Cap Fund?
Flexi Cap Fund with a large cap bias.
Okay.
The top being HDFC Limited, HDFC Bank, which is the which is a top company in this country, together with IBs. So it does have a large cap bias per se. So from that perspective,
why do you want him out of SBI Contra Fund?
Ma'am, the point really is that the investor should not be taking any investments in a contra fund per se at this stage. The investor should be invested in a diversified fund per se. Contra fund is only for those investors who can take very high risk inside their portfolio and can manage the fund.
Exactly, is a contra fund in that case, Aditya? Could you explain the nature of the fund?
Yes. So SBI Contra Fund is generally a fund which is for highly risky investors. What it really does is, if in the market, if you find that there's an opportunity where a company is undergoing a short-term pain and the fund thinks that the pay is temporary in nature, the fund will try to take exposure there. And what will then happen is, over a period of 2 to 3 years, the fund will make good returns. Then over a period of 2 to 3 years, it will not make returns. Then over a period of 2 to 3 years, it will make returns. So these kind of funds have a high cyclicality in their nature of returns, and therefore it is not advisable for any retail investor who is trying to uh, have a long-term exposure to take these kinds of funds. You will have to time your investments in these funds, and timing of investments for retail investors is not desirable. So,
Talking
then I
about
will
the
first.
mid cap funds that you recommended, why no to Mirror Asset mid cap and why yes to HDFC mid cap opportunity?
Recently, ma'am, HDFC Mid Cap Opportunities Fund has picked up their performance. The performance is going up. Per se,
So are
there's
you looking
no
at past
harm.
performance here?
Sorry.
Are you looking at past performance?
No, the portfolio of the fund is really good at this stage, and the fund managers are doing things where over the next 3 to 4 years, HDFC mid cap opportunities will have a good track record per se, in my opinion. So I look at the past portfolio as well, past performance as well as the future fund management strategy that a mutual fund is employing. And from that perspective, out of the two mid cap funds, I wanted to hold one mid cap fund, and I had chosen the HDFC mid cap opportunity.
All right. So we move on to our next question, which is from George, and he has Parag Parek Flexi Cap. Aditya, he has Canara Robeco Emerging Equity, he has Axis Mid Cap, and he says that he has SBI Blue Chip, ICICI Pru Blue Chip, DSP Equity Opportunity, Kotak Emerging Equity also. He's been investing since last 5 years, and he wants to continue investing for more 5 years. So overall, it's a 10 years time horizon as far as investment time is concerned. And he also would want to know if any changes that you might want to recommend. So clearly, it's just 10 years time horizon. We really don't have the kind of corpus, the information for the corpus that he wants to accumulate. But looking at the fund mix, he can opt out of few. Would you recommend that?
Yeah, ma'am. So what is really happening is the time horizon is just 5 years time. So risky funds cannot be included in this portfolio. So I've suggested about five funds: Parag Parek Flexi Cap Fund, Canara Robeco Emerging Equity Fund, DSP Equity Opportunities Fund, Kotak Emerging Equity Fund, and Axis Mid Cap Fund. But on the Axis Mid Cap Fund, he will have to keep his allocation very low. These are all five funds which are existing in his current portfolio, and he should stop the SIPs in all other existing mutual funds. There's no need to go active large cap funds. Large cap funds underperform on the active side of it. These 4 5 funds will do it for them. The flexi cap funds do have large cap bias, so there's no need to add any extra large cap fund person. These 5 funds and Axis Mid Cap Fund cannot have an exposure more than 10% in his portfolio. Existing funds, you stop the SIP and redeem them and go into all of these funds.
Also, Aditya, he's been investing since last 5 years, okay, and now he just has a 5 years time horizon. Do you think he needs to go a little less aggressive?
Yes, and that's he needs to be less aggressive, and that is why I said that the Axis Mid Cap Fund needs to be restricted to just about 10%, 5 to 10% of his investments. All other funds do have some large capish bias or the other inside their portfolio and are diversified completely. So, in my opinion, all the other funds should be really okay.
Aditya, more 5 years, and after that, he has his financial goal, whatever he's lined up for himself. My question is, do he should be invested for all 5 years, or it should be only till 3 years he should be in equity and then start shifting his entire amount in debt? Because coming out of your funds is strategy is also needed as far as your financial portfolio is concerned.
Absolutely. So if he has got a time horizon of about 5 years, by the end of the third year or during the fourth year, he should start doing a systematic withdrawal plan where every month he's pouring out some money from equity side of it. And by the end of the fifth year, he should be completely out of equity. So there has to be a strategy where by the end of third year, you decide that your equity exposure then comes down from about 100% to slowly and steadily to 0% from the end of third year to the end of fifth year. You can do this by a systematic withdrawal plan and park this money up into a debt product, into a debt mutual fund, such as a liquid fund or a short-term debt product. depending on where the interest rate cycle would be 3 to 5 years down the line.
All right, we move on and let's take Lakshmi's question. And Lakshmi says that she's been investing in SBI small cap for at least 1 year, and she wants to know if she can switch in the same category but in a Nippon small cap fund.
Ma'am, so investors are chasing returns, and sometimes the Nippon Small Cap Fund will do well, sometimes the SBI Small Cap Fund will do really well. So investor cannot know per se beforehand which fund will outperform and which one will underperform. In my opinion, if you have got this SBI Small Cap Fund, there is absolutely no need to change per se. First of all, if you have invested in a small cap fund, your time horizon should have been not less than 10 years per se, and you have just started off last in the last 1 year. So some bit of outperformance from other funds will be there. There's nothing to worry about per se. Continue with this fund, and even if it underperforms for the next 1.5, 2 years, you have to stick to this fund, because to see some amount of handsome returns over the next over the next 10 years, you have to continue to do your SIP and be very consistent and disciplined. So no to the change and continue with the existing.
All right, we'll take Kamal's question, and he's looking for a corpus of almost 3 to 4 crores. He's 28 years old and he wants to retire by 60, and he's doing some investments. The funds are Axis Blue Chip, Axis Mid Cap, Canara Robeco Emerging Equities, SBI Small Cap, Nippon India Flexi Cap. And he also says that he can increase his SIP amount, or whether the amount of corpus he wants to accumulate, the current SIP amount is enough, or he needs to step it up. 28 years old, Kamal, congratulations if you're watching this show. The right age to, actually line up your financial goals and have an investment portfolio laid down. You started your investments also. And one good thing is that the first goal is of retirement, which usually we tell people not to delay on that particular financial goal. But let's look at the fund mix and also the investment amount. Aditya, how practical is he as far as his planning is concerned and the fund choice is concerned?
Given the time horizon of about next 30 years, I think the amount that he's SIPing should be good enough for the goal that he's envisaging. Point number one. Point number two is he's got too many funds inside his portfolio. These funds are not really required per se. So I've shortlisted this to 4 funds. Active blue chip funds are not really required. So UTI Nifty 50 Index Fund, Canara Robeco Emerging Equity Fund, SBI Small Cap Fund, and Parag Flexi Cap Fund. Since you are young, try to SIP the small cap fund very, very slowly, slow and steady in the small cap fund, because small cap valuations are excessive and there could be a correction within the small cap space. So you need to first get attuned to the volatility in that area, and then only you should start off the SIP. So these 4 funds you have to consistently and in a disciplined way, you have to SIP for the next at least 25 to 30 years, and you will be able to make your goals.
It's very interesting, a 28-year-old to have this kind of a portfolio and the understanding of, diversification that's needed in their financial portfolio and financial planning. But apart from Kamal, for all those first-time investors, what can be an ideal portfolio to begin with if they have the same kind of goal, maybe have 3 crores till, at the age of 60? Also, how practical is Kamal is for this retirement goal, 3 crores, because 3 crores maybe he's thinking of the present value, and after 60 years this amount will increase, right? So what kind of an ideal portfolio would you recommend? How should they align this particular goal as far as retiring at 60 is concerned, the kind of corpus they would need to accumulate at that age?
And once you start off investing, the first thing that you need to do is you need to start off with a large cap fund or large cap index fund would do, and then start off to invest in a flexi cap fund, which is very diversified. So what it really does is teaches you what is volatility in the market, and these funds are not too volatile per se. So you will go slowly and steadily into the market. Then once you have gathered experience over the period of next 1 or 2 years, then you can slowly and steadily start to dab into the small cap fund and the mid cap fund. So that should be your strategy. Slow and steady investments, slow and steady understanding of the markets, slow and steady understanding of the volatility in the markets, and that's how you should be proceeding. Now, as you correctly said, uh, the investor would have envisaged that he requires 3 crores today, and considering the inflation, that amount will be inflated 4 or 5 times as the inflation comes in. So investors need to really understand whatever amount that they envisage today, it has to be bumped up with respect to the inflation that today currently that we are facing. The inflation today in this country is anywhere between 4 to 10% on general goods, 10 to 14% on the medical inflation, and 10 to 14% on the education inflation that is there. So all of these inflation need to be kept in mind before your financial plan, and the investors need to keep in mind that what is the amount that they will require at the time of their retirement, and then they need to back calculate it, they need to discount it, and see what is the amount that they will require. So net, it is a complex process. It is a process which requires a lot of work. And I will suggest to investors that you should link your investments to goals, and goals which are defined for the next 20 to 30 years with the amount that will be required then, and accordingly they should invest.
Aditya, let's move on. And next question is of. Okay, next question we are taking is of Jitendra. He has started investing in Nippon Small Cap and HDFC Multi Cap. He also has Axis Small Cap and SBI Contra. ICICI Pru Small Cap. He wants to generate 2 crores in 15 years, and he wants to know if that's possible. So again, the same set of funds, more leaning towards small cap clearly in this case. So 2 crores in 15 years. Possible for Jitendra?
And if the current SIP that he will be doing, if I assume a 10 to 12% return over the next 15 years, we will see him generate only 1.24 crores, which is short of his amount. So what he needs to really do, he needs to bump up his SIP at least by 10 to 15,000 rupees more every month. That's the first point. The second point is there's a lot of bias towards small cap funds, uh, which is not really required per se at this stage. So what he should be really doing is he should be controlling the risk in his portfolio. He should be sticking to the Nippon Small Cap Fund, HDFC Multi Cap Fund, and he should be also introducing a Flexi Cap Fund, which could be a Parak Parak Flexi Cap Fund or a Canara Robeco Flexi Cap Fund. Again, I want to warn investors that just because in the last 6 to 7 months, small cap funds have given returns, it does not mean that you have to go all out and only invest in the small cap fund. You need to balance out your portfolio together with the small cap fund. You need to introduce a flexi cap fund and a large cap fund. The flexi cap fund and large cap funds may not give you that amount of return, but they will be able to control risk on your portfolio. And I will conclude by saying return is something that you see on your portfolio, but risk is something that is invisible. You will only see the risk with these small cap funds once the NAVs are down 20 to 30%, which is very normal. Corrections, up moves are very violent and down moves are also violent. So control the risk on your portfolio and don't lean only towards the small cap.
Aditya, what if one wants to adopt a rebalancing strategy? What if you have a higher exposure in mid cap or small cap? Do you think it's the right time to maybe have a certain amount of that exposure in your large cap category, or you can just continue your investments if you have a longer term horizon, or maybe a time horizon of more than 5 years?
I mean, in my opinion, investors should not be overboard on small cap funds right now at this stage. Every time we have seen this valuation gap between the large cap fund and the large caps and the small caps, there has been an inherent correction in the small cap space. So no going overboard on the small cap funds. If you have 60-70% small cap funds inside your portfolio, I will suggest to rebalance your fund and introduce some bit of large cap fund or a flexi cap fund per se. This is the year not to go overboard on the small cap funds. This is the year to chase safety, because with such humongous returns that we've seen on the small cap fund, history has shown that there is a correction. We have already seen that in 2017 when there was a similar move on the small cap space, and 2018-19 we saw humongous correction on the small and the mid cap. So in my opinion, you need to thoroughly see your strategy, see if you are a long-term investor, and compulsorily there should be a flexi cap and a large cap fund to balance the risk that the small cap funds are.
On to our last question of the day, and this has been sent to us via email just now while watching the show, Aditya. This question is from Dia, and she says that she wants to invest 10,000 rupees in equity mutual funds, and she is 25 years old, and she wants to do an SIP for at least 10 to 15 years, and she wants you to help her out with the fund mix. 10,000 rupees for 10 to 15 years, and she's just 25 years old.
Since you are very, very young, to understand the volatility in the market and to understand how NAVs move, you start off with a large cap fund and a flexi cap fund, which I am telling you, UTI Nifty 50 index fund and the Canara Robeco flexi cap fund. Once you have done an SIP here for the next 6 to 12 months, only then you should start to switch to a small cap fund or a mid cap fund where you have understood the volatility and you are ready to bear that volatility in search of higher returns. You should only go to small and mid cap funds if you have a time horizon of 10 to 15 years. Considering your age, your time horizon should be at least 25 to 30 years since you are very, very young and you have the capability to have that time horizon. So start off with UTI Nifty 50 Index Fund and Canara Robeco Flexi Cap Fund and slowly and steadily build exposure into the small cap fund, say a Nippon small cap fund or a SBI small cap.
With that, thank you so much, Aditya, for being on the show and helping our viewers with their financial portfolio queries. And it's wrap up even on the money show, but